Welcome to the 2024 Economic Preparation and Depression channel. Thank you for joining me. Please be sure to subscribe to this channel. Please to me for the latest interpretation of financial news. We're not financial advisors, but we do interpret financial news as it becomes available, ladies and gentlemen. Today, we're just going to briefly talk about, on this happy Friday, the 26th of July, we're going to be talking about this economy. Consumer sentiment is at an all-time low, but GDP is growing solidly, and the Dow Jones hit over 600 points today, soared back after a down day yesterday to rebound to close the week. So what do you think about that? Do you think this rally will continue to exceed expectations? Do you think this economy will continue to exceed expectations, even though many people on Main Street, all of us, are feeling it one way or the other and having to make adjustments on all of our planning and cutbacks and things of that nature as we head into this middle of the third quarter here, the third quarter of 2024, financially and socially and physically and spiritually. So right now we're going to be talking about the U.S. economy. Like I said, the Investopedia.com says that consumer sentiment is at the lowest point since last year. And so if everybody's doing so great, why are Americans feeling a little bit lackadaisical or down about this economy? Well, it remained virtually unchanged for 3 months from its last month's decline, and now it has lifted up a little bit, but high prices continue to drag down attitudes, particularly those with lower incomes. That's what Hugh wrote, an economist. He says labor market expectations remain relatively stable, providing continued support to consumer spending. But that's the key. How long can people in the middle and low income continue to spend other than just spending on essentials, like food, water, security, housing, transportation, utilities? How can that last? How much more longer can that last once we get out of summer and the summer travel season, and when kids go back to school, and when things really get concerning, when things will get tight? How long can the high income earners support all of this? The top 2% or top 5% of Americans who's earning all this money, how can their spending make up the difference from this shortfall that we're experiencing in the lowered areas? So the Federal Reserve's preferred measure of inflation cooled in June. So inflation is supposedly cutting back, but now we have unemployment rising above 4.1%. And so we have a conundrum here where we have GDP, according to MarketWatch.com, is growing at 2.8% pace, which is not exactly great. I mean, it's good. It's just average. Obviously you want GDP above 3% growth every year. We're not getting that. And that's just not us. That's just not a United States problem. That's a Europe problem. That's an Asia problem. That's an Africa problem. That's every economy problem. That's the BRICS nation problem, is that none of these countries are growing above 3% GDP anymore. And so recession signs right now appear to be faint, according to MarketWatch. But things could change. Things look good on the surface. You can have a bunch of things looking good on the surface. You can have, people looking like they're working 2 or 3 jobs in the gig economy in addition to their main job. You can have, spending continue to go as long as credit is flowing. Spending will continue to happen. So that's not a problem. And debt loads will continue to increase. So that's not going to be the issue. The issue is going to be when the carousel stops, when the business credit and when the consumer credit dries up, and when, houses are no longer selling. Then that's going to be a big problem, and the unemployment rate gets above 5 or 6%. That's going to be a big problem for this spending and for the economy. So Dow Jones soars today over 600 points on tech rebound. Quote, optimism about Fed rate cuts. This is plural. Most of the articles are saying that most of the senior economists only expect one rate cut either before the election or after the election. It's still debatable. Now, this is saying rate cuts. So they're thinking the market is basically hoping that the Federal Reserve will begin QE again, and that they will raise market rates. They will raise more rate cuts. They will raise more than one rate cut. So they're looking at least 2 rate cuts this year and an additional 2 to 3 next year when all of this election thing settles down. I don't know. I'm not sure about that. I don't think they're going to be cutting no more than one time this year, if that at all, because the Dow Jones is soaring. It went much 800 points before closing up 654 points, 1.6%. It's up above 40,000 again. And the blue chip index finished in the positive territory for the week. And so we see this surge. You're going to see a lot of volatility, ladies and gentlemen, in these stocks as we continue to bounce these numbers around. And I think they're going to play with the numbers. I think this is inflation numbers are being toyed with. I think the unemployment numbers are going to be toyed with until after the election. And even probably through the end of this year, through the rest of the 6 months throughout this year, you're going to see these numbers toyed with, and it's going to pretend like everything is okay. And then next year, we're going to be going into a very rough period in terms of, this inflation and everything, because the numbers are being doctored with. And you and I know what, in terms of food, gas, things really have not been going down all too much. Even housing prices haven't been going down too much, even though mortgage rates have somewhat stabilized around 6.6%, 6.7% for the 30-year. But other areas have not been stabilized at all. And that's not to say we can get another supply chain shock or a red swan event, a black flag, or some kind of red swan event just before the elections are heading into that season. So a lot can happen from now until December, and so we have to keep that in mind. So it's important to prepare, to continue to prepare, and to adjust ourselves accordingly. So have a great weekend this weekend. Last weekend in July, almost here. So have a great weekend. Whatever you do, continue to prepare. Continue to keep in mind. Continue to be fiscally sound, spiritually sound, and socially sound to keep yourself sane in an uncertain world. God bless. Talk to you soon. Thank you for listening.